Peace to the family. It's the Hood Mystic representing www.hoodmystic.com. Here with another Coins and Currents episode. Today we'll be talking about currency trading. Now, in this episode, we're going to title this 102 and we're going to title this The Foreign Exchange. Based upon just understanding this new information, we need some kind of base source material. You might look online for information. The course is all there. It's not organized and it doesn't make any sense. And it will leave you probably more confused than you were before you went into it. So, with the hopes of that, we put out this series, Currency Trading 102. And this is Currency Trading 102. I would suggest everybody take a look at Currency Trading 101, where we deal with the nuts and bolts and the roots of it. And we'll just continue to do this on a weekly, sometimes multiple videos in a week, where we're just discussing Forex, trades, information, root information, making it in plain English, just in case you get confused by the terminology. So, in our last video, we discussed trading as a business. Because if you don't look at it as a business, you might look at it as an investment. You might look at it as a gambling thing or a gamble, and it's not neither of those. It's a business. We also discuss what moves currencies. We also discuss trading strategies so we can actually utilize our opportunities. And then we kind of touched on creating and implementing a trading plan. However, we will deal with creating and implementing a trading plan in full detail in future videos. Today, we're still dealing with some root information and we're still getting to a root understanding of what this is. So we'll be talking about in this video the foreign exchange or forex or FX. So, how to trade. What is trading? What are we going to be talking about in this video? Well, in this video, we'll be talking about what are currency pairs. If you don't know what currency pairs are, you won't know what you're actually trading or why you're actually trading it. So we'll deal with that. Calculating profit and loss. You can know how much you're going to make and how much you're going to lose before you get in the trade with the proper knowledge. We'll talk about that as well. Using different types of orders. So, what are the types of orders are you placing? Are you buying or are you selling? And why are you doing those things? How to execute a trade. What does it mean to square up? What is a flat? What is, going short or going long? See, all of these things represent a certain lingo or what I would like to call financialese. So, if you do not understand the language, the same as you went to Spain and didn't know Spanish, when people talk to you, no matter how kind you are, no matter how well intentioned you are, no matter how much money they want to get for you, if you don't understand the language, you won't go far in that society. And moving forward, many new traders, many people new to this may have to get used to the simple lingo, the simple language as a major barrier. Like I said, you don't understand what people are saying, then you won't even think that it's a viable resource for you. So this is what Coins and Currents' job is to do, is to make all of this information simple and straight to the point. Am I saying that I'm an expert trader? No. Am I saying that I can help you make millions of dollars? No. What I can say is that I have a grasp for the language for which that everybody is using, and I can make it normal to the normal layperson who's interested in how to make some money and what is the actual steps. So we'll talk about that later. So the biggest hurdle in making a sell or making a buy is that people don't understand currency pairs and they wonder, what are currency pairs? A currency pair is a purchase and a sell at the same time. So when you make a buy, you're also selling. When you make a sell, you're also buying because you're buying and purchasing and selling in pairs. You can't just buy a USD or a US dollar, nor can you buy a Swiss franc, nor can you just simply buy a Mexican peso. You have to exchange normal money or US dollars for the currency that you want to buy. So if this sounds weird, just simply think of it in the realms of the stock market. When you want to buy a stock, you are actually selling cash. And when you want to sell the stock, you are actually selling the stock. And what you get in return is that you're actually buying cash. So understand when you're selling something, you're essentially buying cash. So, like I said, one of the biggest hurdles to this is to buy and sell simultaneously. And if you can just wrap your head around it on both realms from the buy perspective and also the sell perspective, then you can understand what this means. So, like I said, when you buy one currency, whether it's USD or whether it is a Canadian dollar, you have to have another currency for which you are selling. The same thing is when you're selling one currency, you're essentially buying one another. So if you can understand this in a nutshell, it doesn't get too confusing. However, in the whole scheme of people telling you that you can manifest $5,000 and you can do this with the money and you can do that with the money, you can live in $1 million estate at the same token can't express what is actually happening or what exactly is a currency pair. So to make it simple in the realms of what they would call algebra, x is always compared to y. You never have x isolated, nor do you have y isolated when you're doing trading and in the realms of forex, trading currency pairs, currency trading, so forth and so on. So in the realm or the scheme of things, there's a such thing called major currency pairs. Now, major currency pairs are the US dollar. And the US dollar is one of the major currencies based upon it is the number one denomination throughout the world. So, in the realms of oil, when a person sells their oil, what they usually get in return is the US dollar. When a person buys their oil, what they need to buy it with is the US dollar. So, say for instance that that company doesn't have the US dollar, he has to convert whatever currency he has into the US dollar, which makes the US dollar so valuable because it is connected to major commodities such as oil and major what they would call natural resources such as gold and air even. So you buy other currencies with the US dollars because you think that another person will sell, okay? And if you think that if you think that the US dollar will rise versus another currency, the US dollar might be more than the Swiss franc. If you do that based upon your technical analysis, which is you know how to read charts, and then you know that because of your fundamental analysis, because you know that there's been some scandalous, salacious story with the president. You know this. So, with all of that being said, you can say, I know that the US dollar is going to rise because of my technical analysis, my fundamental analysis. I'm going to go and buy this pair. Well, when you buy this pair, you're selling versus the other. And once through time, right? Maybe 24 hours, 48 hours, maybe a week. If this if you're right, then that means you make money. And if you're wrong, that means you lose money. But when you are trading currency pairs, you are going to either make money or lose money. That is why it is so important to have technical knowledge as well as fundamental knowledge so you don't just simply waste your money going with the gamble. So, this is a quote by Ivan Beji in relation to how to stay in the game for longer than making money or losing money, but just to see if you have what it takes to learn a new skill, if you have what it takes to provide for yourself on a new level. And so trading doesn't just reveal your character, it also builds it if you stay in the game long enough. So in the face of this presentation, I'm going to speak about some ways that you don't have to simply just crash and burn if you don't make $5,000 in a day. We can explain this. So um, within trading, there's a such thing as market position. And market position is how you enter that trade, or what are you thinking that this trade is going to do. So if you think that it's going to raise, you would create a long position. However, if you think that this trade is going to go low, then you would create a short position. And a long position is a buy, and a short position is a sell. Now, if you don't know this, you will hear these terminologies and things of that nature, and you wouldn't know the difference. But the idea here is very simple. You want to buy high or sell low. And the reason you know it's high is because you have done the technical analysis based upon the week, the day, or even down to the hour. And you want to sell low based upon the technical analysis so you can determine whether this actual currency pair is low and is this a good time to sell, or if it's high and this is a good time to buy. And so, what's very simple about market position, what most people will understand about gravity and about life, and as well as currency pairs, is that whatever goes up must come down. There is no such currency pair because we're dealing with people who invest a lot of money on that the stack, that I say stock, but the currency pair rises and lows, because there is just no set way for the market to just continually rise, 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 rise. So if you just do your technical analysis, understand the market, you can simply see where the market will fall or where the market will rise. But you have to give it some time. So squaring up. Squaring up is when you're closing on an open position. And an open position is just a position when you're in a trade that you're at risk. And the reason that you're at risk is because there's a possibility that you can lose money and there's a possibility that you can make money. Good traders, once they get into profit, they move their stop loss into profit. So even if they do lose, they won't lose more than what they move their stop loss to. But once that currency pair hits the targeted price, it closes. And once your targeted price closes, then your trade is no longer active and you have essentially squared up. So a short, which is a sell, to square up, you would have to do a buy. So once you buy on a sell, that means that your position is closed and your position is flat. Now, if you have a long, which is a buy, to end your trade, you would have to sell it off. And once you sell it off, you have gone flat. You have actually squared up your trade. And now you are no longer in the range of risk or exposure. And we bring this to your attention because when you are in a trade, you are in the range of risk. You are in the range of exposure. But you get to determine how much risk you will be able to face. So profit and loss. Profit is very easy in this market. Loss is very easy in this market. We paid attention to the oil when it dropped. We placed market stops on the, we knew that it would rise, right, at a certain point, and lo and behold, it rose. Plenty of pips, plenty of we got plenty of money on just watching the market rise. So even more so, is is oil going to just stay at its particular point, or will it rise some more? The obvious answer is that it will rise some more. It just will not bottom out. If things fall, the same way that you look at, certain prices falling, the same goes as certain prices will rise. So it's really straightforward if you look at it from a certain perspective. However, there's a lot of confusion out of this business. Um, there are people making a lot of money, but because they're making a lot of money, for one, they're not telling you how they make a lot of money, and for two, them making a lot of money is not going to help you. So we say profit, success, very easy. Losing, failing, just as easy. So we just have to understand how to work your margin, and how to understand your leverage. In our last video, 101, we discussed leverage. In this video, we'll go double down on it in more detail. But this is how you determine how much you should, would, and can trade. Um, and also, we want to factor in I can lose. So, how much do I want to lose? And then I can profit. How much do I want to profit? Of course, you'll say, good, Mystic. I want to profit as much money as I possibly can. But like I said, that stock is just not going to rise and rise forever. More than not, if you don't capture your profit in a timely manner, that price will actually dip down to where you started at and possibly even lower. So a good trader has stop losses and as well as take profits because a good trader knows when to get in a trade and when to get out. A novice trader has no understanding of trends, recovery, turnarounds, none of these things, and will stay in a trade because they think because they made some money that it will just continue. However, what comes up must come down. So then you want to have a significant account so you can stay in a trade longer. Because if you only have $100 in your account and you're betting, let's say, $1, you'll be in a trade for a minute. Because the moment that that trade moves into a negative, it'll zap up your account that fast. However, say for instance, if you have $1,000 in your account and your margin is not that large, when it goes back, you won't be hit as hard. And if the more money you have in your account, the more it can actually regress because, like we know, what goes up must come down. And why does this happen? This happens to knock the people who have little skin in the game off. So if you're in little bets, tiddlywinking with this, but at the same time you're trying to make a lot of money, it's just not gonna make sense. So you just have to understand. So in the ways that we understand is by counting our pips, okay? And pips is a word that you will hear a lot and most people have a hard time explaining it, but it's quite simple, right? So, leverage is another important part of understanding pips because pips could be another acronym for points and percentages. And these points and percentages, based upon everybody having different amounts for which they leverage, is the way that we calculate as a consensus how much that price has raised or lowered. So leverage thus amplifies your losses and your gains. It will, because all leverage is either 1 to 50, 1 to 100, 1 to 500. And you'll be like, oh, I want to leverage 1 to 500. Well, if you leverage 1 to 500, then you could also lose 1 to 500 just as well. So find a safe zone for which you can actually know what you're doing until you know, like, okay, I know that I can trade, I know that I can win. I'm going to up my pips or up my actual leverage amount. Um, but whenever you get into these accounts, the broker is always going to leverage your money. And the way that they leverage your money is through what they call pips. And this is how you are calculating how much you win and how much you lose. you can determine all of this, way beforehand. So, say for instance, you want to make 50 and risk 10, you can calculate this all with your pips. And they even have a calculator for which you can use and download on most app stores, Windows, iOS, so forth and so on. So, to summarize, the pips are how you calculate how much you want to put your trade into stop loss. What is stop loss? Stop loss is the point within the trade that you are in the negative. But say, for instance, you have 30 pips into the negative for your stop loss. When that trade goes into 31 pips, the trade is shut off. You lose no more money. And this is great if you're like busy, right? And because, say, for instance, you didn't have this stop loss and you went to sleep for 8 hours and that price just dropped and dropped and dropped and dropped and dropped. You might wake up and your whole account is just gone. So, those stop losses are very important. Take profits for the reason that I said earlier. That price may hit your point, it then drop significantly. So hopefully you have a take profit and then you take that profit, and then let's talk about how you can have a take profit but still continue in this trade. And this is called twin trading. So twin trading is a technique that I've learned in the school that I've actually been paying for and learning, and it's just one of the like many things that I've learned. However, twin trading is such as this. Say for instance, you have a take profit. And a take profit is where you're trying to maximize your trade value. But you want to maximize your trade value, but you don't want to get out the trade. So you would place an additional trade on top of that original trade and have that take profit be somewhat larger than your original trade that you placed. And the reason why is because once that first trade is out, you'll have a second trade that will continue to grow, right? And some people do this with two trades. I've seen people actually do this with five different trades on the same currency pair. So once that actual take profit is reached, then that second trade is going for that second take profit. And if that is reached, then you have a third trade that will follow it up. Maybe it will linger. When it doesn't have a significant drop or a significant raise in the trading community, they call that consolidating. So once the trade consolidates, you see it consolidate, you're in profit, you can simply move your stop loss up, and once you have your stop loss up, that means that profit is locked in. Maybe it'll raise up, maybe it won't, but whatever happens, your profit is secured. So this is twin trading in a nutshell. And these are some of the things that we talk about in our group. And just to understand this a little bit further, you take one trade position and you have a take profit of 50. Then you have a second with a take profit at a different price point, and so forth and so on. And these, you are risking the same amount in each trade. Say for instance, you have $100, you would use 0.01. Now, if you have $200, you would use 0.02, so forth and so on. However, when people get to $5,000 in account, they have conservative amounts. And a conservative amount is an amount that you can wager forever and barely feel a loss. However, when you win, you really win. And this is like a set point that they trade on. And these are for larger accounts. And you can have a larger account, it's just more based upon your knowledge and understanding of trades. But when we're referencing knowledge in trades, I'm actually formulating a team. Understand, family, I am not the guy. I'm not the financial guy. However, I am the organizer. I do know a lot of people, and I'm bringing a lot of people on for teachers, advisory roles, and council roles. And so this week in Coins and Currents, I'll have some people come on and talk to us about trades along with me and Hancho, along with me and Rob. We're doing this every day. We're trading every day. We're giving out signals every day. So every day we're giving out multiple signals that we're all getting in on. So next week, ladies and gentlemen, we'll have some real time results. We'll show some real money that we've made and we'll really get at it. We've been really setting this thing up, really building this Patreon page, and now is the time to really deal with some results. So this is not a long video. These are not, you know, well videos where it's like a whole bunch of information. No, I'm gonna get on here, talk a little bit of information based upon scholastic knowledge in relation to currency trading, and maybe you get nothing from this. However, I don't do this for you. I do this for me so I can understand this thing. So if you like this video, please join our Patreon channel for new traders and old traders alike, because maybe you need some help with some signals. Every day we're dropping multiple signals. We're going in Sunday at 5 and we're not stopping till Friday at 5. So join me on the Patreon family. Thank you for watching this. Like, subscribe, DM me for more information, email me for more information. But with that being said, I'll see you guys on the next video. Peace.